think no man's land is a great way of saying it, but in our members in Europe, we have members all around the globe. Our members in Europe are concerned about things that are more out of their control. China economy and the impact on Europe, Ukraine, inflation, and of course, Germany is now in recession. Whereas in the U.S., what seems to have been driving the last few days is congressional gridlock on the budget and the UAW strike. So in America, many of our members are concerned about factors within our borders, whereas in Europe, many of our members are concerned about factors outside of the borders.
That's fascinating, and we'll come to Europe a little bit later, Michael. But I mean, I would, if my colleague Karen said that, I would probably kind of launch into a big battle with her now. So I'll try and do the same with you, because I hear what you're saying about the congressional problems that McCarthy's having. I mean, it's there for all to see that he can't control his caucus. And I hear what you're saying about the UAW, but that is, dare I say it, one albeit very important sector as well. I've just got a sneaky feeling that the market doesn't like what it sees on longer term rates. It doesn't like the fact it's not going to get its rate cut in the first half of 2024, and it's throwing its toys out the pram.
You have to put that in context. Our unemployment is literally at a 50-year low. We haven't seen these numbers since the late 60s, I believe. So you have a very strong middle class with purchasing power. Everybody's concerned about inflation, but the basic employment numbers are unusually strong.
Michael, it's been a volatile trading month at this point. I just want to ask you how a lot of your members and clients are feeling at this point. Are they concerned that we're still going into a recession? Are they concerned about some sort of policy error from the Fed at this point? What are you seeing in terms of their confidence in the economy?
Yeah, I'd say that our members in the United States, our members manage about $150 billion, not us, but our members. So the U.S. members are a little less concerned about going into recession, and our European members are a little more concerned. That's just the nature of the beast right now.
So when it comes to the higher for longer story that's been spelt out by the Fed this week, we've seen markets react. The yields pushed higher, and which means, of course, we're now looking at about the impact of those Treasury notes for this year. And we've also seen the stock market wobble. Should we be concerned about some sort of market correction still taking place from here? How are you judging the conditions?
So because our members are some of the greatest entrepreneurs who have already sold their business and they're into wealth preservation, they're looking at medium-term impacts. The cash holdings are about 12%. They've trimmed down public equities, but our real estate came down a year or two ago because of rising interest rates. And private equity is now king. That's where businesses are still scaling. Of course, the availability of credit makes it a little more difficult. But private equity is where our members are really focused, because when you have basic businesses that are growing rapidly, that can outperform the market.
Michael, just to that point, as you bring up private equity, there is a view that private equity might have a role to play too in the clean-up of any distressed debt at this point, distressed assets, as we see credit costs move. What are the opportunities you're seeing in private equity at this point?
So private equity grew over the last decade from 10% of our members' portfolio to today 30%. It's the largest change. And within it is venture capital is probably a bigger category today than it's ever been. A lot of our members have seen that. AI is a huge opportunity. Climate is a huge opportunity. And obviously the energy markets have done well. So our members really think that the fundamental growth over the long term is going to be favored. Of course, with AI, it's a mixed bag. You have great companies like all of the FANGs that you mentioned before that have AI plays, but it is potentially going to replace significant amounts of jobs as AI not only works next to people, but when you have a computer that can replace 100 people in a call center, that could be quite concerning as well. That's what's going to play out in the midterm.